Hello, everyone, and thank you for joining today's live stream. I am Tammy DaCosta with CoinW. Now, if we're looking at crypto markets at the moment, we can see that crypto markets, there is some optimism that has returned. And despite what's going on in the broader economic environment in terms of geopolitics and tariffs and all of that, we do see that market sentiment has actually returned to, especially when we look at altcoins. So if we're looking at the futures markets, we see Bitcoin is now sitting at over 98,000, and then Ethereum's back above 2.7, and we are seeing some of that optimism come through, as I said, and filter out into markets. So it is looking a lot better than it has been. But if we look at just some of the fundamental risks and prices, there have been, for example, Bitcoin is currently threatening some big resistance, and we will look into those trends. But we also need to be vigilant about liquidity and the imminent risks that are facing markets. Now, if we quickly look at, we're going to touch on some of those factors. And as I've been speaking about, the Trump tariffs are a big one for me in terms of sentiment. And I don't think, well, hopefully all of you can hear me today, because apparently my sound was not working on Friday. If you could, in the comments, give me a thumbs up. That would be appreciated, actually. All right, so as I said, what we need to look at, if we're looking at Bitcoin, for example, for price action, and we're looking at exactly what's been happening, I have added the Bollinger Bands with this chart. Now, this is the daily chart. And if we can see price action, it has almost these Bollinger Bands, which represents the standard deviation. So this is the middle one, is the 20-day moving average, because this is the daily chart. And then this is 2 standard deviations above, 2 below. So if we're looking at Bitcoin and we're looking at the price action, we can see that there has been some volatility, but we can see that there have been levels that have definitely been honored. And this is a good indication, especially as we go into such a difficult time in terms of those geopolitics and that transition of power. We see more and more of that risk-off sentiment. But even though Bitcoin and crypto is still known to be speculative, this kind of confirms that it is seeing some optimism, especially in terms of whether it can actually hold its value in terms of economic duress. So we are looking at Bitcoin price action, and at the moment, we saw that it went down to that lower bound of the Bollinger Band, but as those dojis show as well, there has been a big level of support there, and now prices are starting to turn higher. If we look at the other markets, we see altcoins, which have been lagging, have also received quite a positive tick. And so one market that is performing well today is crypto. But now in the basically in the description, I did say that I wanted to look at the fundamentals, and this is why. Now, if we look at even Bitcoin, let's go back to the price action, or actually let's go to one of the altcoins. So if we are looking at, let's take Ethereum, okay? If we are looking at some of the fundamentals, or we're looking at the price action, we can see today prices are higher. However, for the week, for the month, they are still lagging behind Bitcoin. And this has raised doubt about whether it's altcoin season and whatnot. But to understand why the current economic environment also plays a role in facilitating or driving price action, especially in terms of crypto and so forth, let's look at what happened on Friday. Now, on Friday, we had the non-farm payroll report. And what this is, okay, let me just get if I've got my Ethereum here. Okay, so the non-farm payroll report is basically, it's an indication of the current job markets in the United States. Now, why this is important is because it sets the tone for what interest rates are going to do, or what the Federal Reserve is going to do at the next interest rate policy meeting. And this plays into the whole strength of the actual currency and of the crypto. So what we saw throughout last week, and actually leading up to these events, we saw a gap lower with Ethereum. Okay, prices gap lower. And then last week, after that non-farm payroll report, we did see prices turn positive. And this is because the headline number showed that the job data in the US wasn't actually as strong as people expected. And interest rate expectations, then people think that maybe interest rates won't stay high for so long. Sorry, just give me a second. Apologies for that. Okay, so they think that interest rates won't stay as high for so long. So this brings a shift in the sentiment. Now, when that report is released, what we can do is, if we go to one of the shorter time frames, let's see how it looks here. Okay, so what we can see here, okay, this is a very short time frame. So let me go to the 30 minutes. What happened on Friday is, once again, we got that report. Now, we saw that prices were they were trading quite low. And then as soon as that report came out, we did get a slight tick in optimism. So, or actually, for Bitcoin went higher. And then we got a slight tick in optimism for Ethereum, but then we saw this pullback again. And prices settled, and then we've seen quite a nice recovery. And now prices are lingering around that 20-day moving average. Or no, sorry, it's the 20-period moving average on the 30-minute chart. So even though we've got a lot that's happening in the fundamental background, prices are still honoring those price actions. But volatility, especially around these events, does usually play a role in spurring prices, especially in the short run. Now, if we look at the economic calendar for today, we see some key things. So Fed Chair Powell, he's supposedly, he's going to have his testimony, and that is at 3 p.m. And that is UTC. And why this matters is because now Fed Powell, he's the current Fed Chair of the Federal Reserve. And they are responsible for controlling the money supply. How do they do that? Is they do that through either higher interest rates, or they do it, there's monetary policy and there's fiscal policy. Monetary policy is controlled by the Fed. So this is controlling the supply of money by using tools like interest rates. And when interest rates go high, consumer spending generally declines, and then that controls the balance of inflation and interest rates. So throughout the Biden administration, what we had seen was a big focus on trying to get inflation back to the 2% target. And in doing so, what happened was with US government debt, US debt was rapidly increasing because they're printing this money and it's stimulating economic growth. But as you stimulate more economic growth, there's more demand, and so prices rise. And so to do this, now there's this whole balance that they're trying to get inflation to a 2% target and to get employment or unemployment rate at 4%. Unemployment at the moment, with the non-farm payroll report that we saw on Friday, we do see that non-farm payrolls, the headline number missed expectations, but the unemployment rate actually came down to 4%. But we've got a whole transition of power now. And we need to remember that a lot of these economic data points are actually backward looking, meaning that the non-farm payroll report shows the job market or job data for January. And now the big data release comes in tomorrow when we have the inflation for the US. And this is going to be the core inflation for January. So once again, backward looking, but it can set the tone of what's expected going forward. In the interim, we've had Donald Trump, who now, his main objective, and it differs a bit from, well, a lot from Biden, is to control, basically he wants the US to be prosperous, he wants to cut spending. And he's got nobody else but Elon Musk, who's a big funder of Trump, to basically help him do this. So when we're looking at these data points, we need to also realize that these data points are reflecting the US economy, but before Trump has been inaugurated and before these policies have come into place. He's big on tariffs. Some of the moves that we've seen is he said tariffs on there's 25% increase on basically all imports to the US of aluminium and steel. And that's across the board. And then he did say that more, and this will come into effect on the 12th of March. He still has that 90-day freeze of all government funding, all foreign aid funding. We still see a war in the, between the rebels in the DRC, and M23, the Congo and the M23. So there's a lot that's happening on the geopolitical side in terms of we've got a war in Congo, and now the US isn't funding Africa anymore. So same as Ukraine and Russia, we've still got that war. US has cut off all funding for 90 days. And so that's also, bringing other issues into light. However, there's obviously reasons for this, and we see other tensions as, for example, South Africa and the United States. There's now certain sanctions and additional tariffs. So there's a lot that's going on in the background. However, this still has to be filtered into markets. Remember, the impact of tariffs is going to be a longer term effect. So in the meantime, we do have this data that kind of gives us a guideline as to, okay, how's the economy still performing in current circumstances? And this is why Fed Chair Powell, why this testimony is so important today, is because Fed Chair is, the Fed Powell is going to be questioned about Trump policies, about tariffs, interest rates. So this is going to be, it may provide a big indication of basically how the Federal Reserve perceives these tariffs or the economic implications. For crypto, what does it mean? Well, for crypto, if we look again, it's still performing really well. And this is despite the fact that we have had those pullbacks in prices. And now we're seeing, even though there is this, there are these fears, especially with regards of the longer term repercussions of tariffs and trade wars and real wars, we still have altcoins now actually coming to the party. But if we look at the stock market, stocks aren't doing that badly. We see the financials are coming down a little bit today. But once again, there has still been a lot of optimism despite those risks. So we need to remember we have had positive earnings still. We are still, the markets are still quite optimistic, but those short-term announcements, those news events are definitely driving volatility. So in saying that, what we also need to remember is, okay, so we've looked into that. So if we look at now, so here's the United States, the interest rate, and then this is the inflation expectations. So as I was saying, as interest rates go up, it makes borrowing less attractive. And this is what was driving, basically, we had the COVID pandemic, we had very low interest rates for economic stability. And then we had supply shortages, spurred inflation. And to get inflation back down to its target level, we've had to hike interest rates. So it has been working, but now we've got those policies and we've got higher tariffs. What does that mean? Anybody that wants to send steel or aluminium to the United States is basically, or any company in the United States that wants to import from outside, now has to pay 25% extra on any imports for steel and aluminium. This is to increase production in the US, but we also need to realize that now suddenly the costs are going to get high because we don't have that global trade and those trade agreements. So who lands up actually paying those prices? And that's why inflation expectations now are now getting an uptick again. When it comes to Bitcoin, however, Bitcoin shares the same sentiments or the same characteristics as gold. Why do I say that? And maybe it didn't, well, it definitely didn't used to. But if we look at the daily chart, for example, what we had seen here, and this, I'm just going to use, these are actually, okay, let me just, okay, if we just have to take this move here, this is, so we're looking at from the 11th of November, from this gap, we can see that recently prices have still, we had that February move, and then we had prices go below the 50-day moving average. And now that short-term trendline resistance, prices are now ticking up, and it is looking more positive, especially with regards to, as I said, we did have some uncertainty here. We got a nice bullish candle yesterday, and this has continued throughout today. However, as we get closer to Powell's comments, I think volatility is going to be something to watch, and we will have to be very vigilant about what to see there. But now let's look at the short-term time frame for Bitcoin, and then we can kind of discuss some of those other implications. So once again, we see, so this is now a short-term time frame. So it's the 45-minute. And this is that 32% retracement. And this was from the November, that gap. that we saw after, well, basically at the Monday or the Sunday evening open for Bitcoin on the Sunday following the elections. So we saw that gap, and then we saw prices break through, make a new high, and that was the day of the inauguration. And then since then, we have seen prices come down. Bulls did try to push prices higher, but now the major resistance is at 107,500, and now prices have been consolidating. And they've been consolidating within quite a tight range, because if we look here, the January low at 97,650, and we saw quite a big pullback to Feb, but now we've seen that at least in the interim, this level is actually holding quite nicely. So now prices are going back to short-term support, which was prior trendline resistance. And now we're kind of waiting and to see what happens next. But this 98, so currently it's at 98,200, but this 98,000 zone is a big zone. Actually, this whole zone here, because 98,890, that played a big role in, if we look, for example, the January low was at 97,650. Then we saw prices break after coming down from the January 31st. So February already, as we opened, we saw prices gap lower. And this is very important in terms of it shows that exhaustion of the trend. So we get a potential attempt to break, okay, then we get the pullback, and this we're using short-term charts, but I just also like to see the fact that it shows, those clear zones that actually end up coming into play at a later stage. So now we're trying to fill, we've basically risen back again above the Sunday open, but temporarily. And we can see now this is also providing an additional short-term resistance. So coming up to that meeting, as I said, I think we have to be careful, because once again, if we look at Bitcoin 45-minute chart, this was when the non-farm payrolls on Friday was released. So once again, we got a nice bullish candle. On the 45 minutes, we had 1.35%. And then we had another 1%. Once again, prices tried to test that midpoint. And this is of the longer move. Or actually, I think this was the January high to the Feb low. So it tested midpoints at another psychological level, 100,000, 100,800, but around that 100,000, we can see it was rejected here. And now prices, the consolidation, basically, this is a sign that, okay, short-term volatility can drive the prices in either direction. So we need to be careful of that. If we are taking a bearish, or if you're looking at the bearish setup, you can, well, as I said, we need to first clear some key levels. This level here, the 97,170, that's been quite a nice level of support on the longer term time frames as well. And so we must just be aware of, for now, this zone is key. So to me, it's the 90, well, for the imminent move, 97,650 as support, and then 98 for the upside move. So we do have some catalysts or potential catalysts, primarily that Chair Powell speech, and then also Europe, after those tariffs were announced, we do have Europe saying that they will retaliate. And so tensions, once again, everybody's on edge, but are markets really that, I'm not saying that there's no fear, but what I'm saying is I think that a lot of this, there has definitely been a lot of fear that's been going into markets, especially since the beginning of the month. And now we're seeing a lot of those prices, that stability. But for the shorter term run, we're seeing that the key things are liquidity and volatility. And that's what we need to be vigilant of around these events. But as Bitcoin currently, so we see that, yes, it has eased back after attempting today to try hit that, or it threatened that 38.2% Fibonacci resistance, and then it was rejected. And now we see prices coming down with the potential of a further correction back to 97,650. And as you said, here is I'm using the CCI, Commodity Channel Index. So when it's above 100, so on the short term, once again, it did temporarily go into overbought territory, and now we see it come back into the normal terrain. Now let's look at what I wanted to look at is, so once again, we've spoken about the interest rates. We've seen interest rates and inflation expectations, which is still a critical topic, especially ahead of, as I said, tomorrow's inflation print, which will kind of set the tone of how things are shaping up, or how things performed in January. Now, remember, in January, even though it's backward looking, we've already had some of those factors. For example, spending may not be as robust as in December, but we have already seen how Trump policies, for example, if we look at the Michigan sentiment, we have seen a reduction in the confidence. So there are a bit of market jitters, and that's why the inflation print, it still matters. Because now it's not only about price pressures because the economy is growing, it's now price pressures because of those tariffs, or the potential of those tariffs to now land up with actually doing more harm to the United States than good, or at least those fears. Then again, on the optimistic side, those, for example, the tariffs on aluminium and metal, there still needs to be clarity. But on the other side of the spectrum, there may be room for negotiation. And if you follow Trump in his first term, actually this was, okay, I can't blame Trump, but trade wars were a major mover for price action back then. And in 2018, a similar thing happened. It actually caused my worst trade ever, but it taught me a lot of lessons. And Trump threatened China with tariffs. Once again, markets went crazy. I lost quite a bit of money, but as I said, at least it taught me a lot. And that's when I got into technical analysis. And now what we have is, after markets went crazy, Trump basically turned around and him and China were friends again. So those things can't be ruled out. We know that Trump does definitely use it as a negotiating tool. Okay, there have been other things, like for South Africa, we know that there's other tensions and other issues that are more political. So I'm putting those aside. We're not going to go into that. But if we look at Bitcoin and the price action, and we look at something like gold. Now, gold has also recently hit fresh record highs. Gold is also a hedge against inflation. Okay, and we can see here that as the inflation expectations, for example, have been stabilizing. Okay, this is this chart here. We can see gold prices have been going up. Why? Because if there's lower, or with inflation coming down, we've seen interest rates, there have been a slight reduction in the interest rates. But look at what happens here. So we see gold hits, well, basically peaks. And this is where the inflation expectations basically diminish, because now we saw, and that's what allowed the Reserve Bank also or the central bank, that's what's been allowing central banks to reduce interest rates, is because of inflation showing positive signs of easing. However, now look here, we saw another uptick, and now we're already at, levels we've kind of given up or sacrificed that progress there. And this is the problem. So gold does benefit. Gold has been benefiting from its safe haven appeal. And in the same way, Bitcoin has been showing the same signs. Why is this? Is because both of these, let's look at the characteristics. So if we look at the characteristics, both gold and Bitcoin have, let me change this. And let's go Bitcoin. Okay, there we go. So we can see that recently, okay, this is, but they've both been moving in the same direction. So we can see, for example, gold is currently trading, well, this is on the daily. If we have to look, and this is, okay, well, we're just looking at overall. So this is the Bitcoin chart, and then this is gold. So we see that both of them have had uptrends. Okay, crypto has been booming a lot, or has done really, really well since November, and that's because it's not just the whole geopolitics, it's that the whole perception of Bitcoin has changed. So now we see that these are developing, or they're showing similar trends, which usually we would see an opposite. We would see that there was a negative correlation. But over the years, especially recently, we have been seeing those assets move in the same direction. So it shows that now crypto is having a bit of a safe haven appeal. And thus, we can't rule out the potential of higher prices. However, given the economic uncertainty and everything, that's why I said that volatility is definitely leading to short-term repricings, and this could be responsible. Well, I'm expecting that these factors are actually going to be the primary drivers, at least for the remainder of the month. So if we now go back to, let's go to Ethereum. Let's go to this chart. Okay, another thing we need to actually be vigilant about is that there are different zones, for example, and this is basically liquidity. So this shows high levels, or levels that are also potential for like high liquidation zones. So we need to also be aware that there are levels where we know that there's big players, especially institutions and your investors and your smart money, that where they do have liquidation profiles, where they've got big orders, you've got algorithmic trading, and this also plays a factor in, especially with regards to short-term price action. So it is important to be aware of these zones. So for now, we can see that I'm still short-term bullish. I think that there are prices, even though I'm skeptical about being too optimistic. I do think that, Fed Powell's comments are going to drive markets, especially with the repricing situation. However, if we get a break above here, I think, well, to 100,000, I think that would be a positive sign. And then on the for the pullback, I think this zone here is quite an important zone, and we can see there those short bodies. It is indicative of a big zone of support and resistance. We've seen that bears haven't really been able to gain traction below that, so this is also another thing that I'll be monitoring. If we go to Ethereum, and we look at Ether's price action, once again on the daily chart, I think this zone or this candle to me is really, really significant. It's at the bottom of a bear trend, and we can see that this is a really bullish candle to me, because it shows prices or bears try to push lower. And last week markets were just really in turmoil, and once again crosses below the lower Bollinger Band and goes slightly lower on the daily, but we can still see where closed, it was nowhere near the low. So we can see that there was a lot of bullish pushback, and prices haven't been able to gain traction to go closer towards the 2000 level. So currently, I think 2,700 is a key level of resistance for Ethereum. On the bullish side, I do think we need to clear that zone, and then it leaves the door open, for the moving average. Well, basically, that 2970. So that would be the 20-day moving average, which would be, or actually 2974. So I call it 2,970. So for me, that's a key zone of resistance that I'm now monitoring. But for the bearish side, I think the next level would be 2,500. So Ethereum, I still think that it does have some room to go up. But turning our attention back to the economic policy, or at least what we have today, the Fed Chair Powell testimony, what I'm looking at there is also how he incorporates crypto, or how the Federal Reserve plans on incorporating crypto. I think that is going to be asked, if I'm completely honest. And then we also have other events. We've had Elon Musk now wanting to buy OpenAI. So there's a lot happening in the United States as usual, and it does have economic consequences. It also has implications and consequences when it comes to sentiment. So I do think that it's worth monitoring those to a certain extent, especially in terms of volatility. So that's what I'm looking out for. And then tomorrow, we've also got so Fed Chair, so he will give his testimony. Powell will give his testimony today, and it's the first day. And then basically he addresses the House tomorrow. So it's the Congress today and then tomorrow. So I think those details there are also going to be significant, especially with risk sentiment. But overall, altcoins are looking pretty optimistic today. I think they have had quite severe pullbacks, especially if we look over the past few weeks. So it's nice to see that they're actually getting some love. And I think stable coins are also, they were benefiting from that risk of sentiment. Now we're seeing some drive back to more risky assets. We have seen European equities are actually doing really, really well. So it's not a complete risk of sentiment as yet. But what's nice to see is during a time where there is still that negative news, altcoins are being able to now come back to the party. So whether it's altcoin season yet, I wouldn't say so. But I do think now we're seeing more and more of those levels. For Ripple, I think it has also seen tremendous growth. It's now trading below $3, which is now the resistance. But as I said, this is looking a lot better than it has been over the past few days. Those are the things that I will be monitoring. What I'm also going to be looking at so when it comes to tariffs, basically this is why tariffs are happening. So if we look at US import and export price index, what is happening is Donald Trump, as I said, he's pushing for things to be, well, basically products and goods and services to be produced within the borders of the United States. But he also has some policies like he wants Canada to become the 51st state of the United States. He's been clear about that. Japan and the US are now going to be, they've entered into an agreement for Japan to do trade with the US for the oil and natural gas. So these things in the background are definitely worth watching because this also drives commodity prices. Commodity prices are a key indicator for inflation, and so there's that knock-on effect. What is another big thing, though, is the humanitarian crisis. So we do know that, yes, Trump and Musk both they believe that they can cut US debt by significant amounts, even though they want to decrease corporate taxes. And this is all the policies that were actually driving the initial move after Trump's election, was the fact that, yes, now we've got that optimism of, okay, fine, there's going to be corporate tax cuts, there's going to be, more local production, but have we actually considered the fact of those deportations, all those immigrants that have been deported, what happens with regards to their positions in the labor market? Is it going to be, what's that going to do with the employment situation? Even though, yes, they wouldn't really be, because if they're there illegally, they're not part of things like non-farm payrolls. But we also have, job cuts and things like that are going to be or filter into the economy at a later stage. With regards to the wars, now there's not going to be an imminent ceasefire between Israel and Hamas. So that's on the war front. And then obviously tariffs, trade wars, and all of that. That is what I am watching going into tomorrow and that inflation print. However, for Bitcoin, I think we're still doing quite nicely. Okay, we got a red candle. We did get a 0.38% decline. And this is on the 45-minute chart though. So I think it's also just markets once again looking for directions. We've got this Fed move that's still also providing an additional layer of resistance and support for this move. So there are some nice levels, but as that consolidation builds, I think the tighter that range, basically, the bigger the probability for breakout. That is what I'm going to be watching, and I will catch you all tomorrow. Thank you for joining.